Well, this is about a practical understanding of insurance. And when you do that, a good way to start is on this first-party coverages, third-party coverages, and workers' compensation. First-party coverages is direct losses to physical assets you own or lease and they're insured. And they can include things like buildings, personal property, tools, and equipment. Third-party coverages are coverages to protect you from others who allege you have negligence or have fault and have caused either bodily injury or property damage of some sort. Those are third-party coverages. And of course, the workers' comp is something that's required in the state of California, and it covers the medical costs and lost wages for workers injured on the job that you're responsible for. Most of you are familiar with this first party, third party, and workers' comp kind of coverage. Now, what are the different types of insurance? Basically, nothing brainstorming. There's commercial general liability, or they call it CGL. There's workers' compensation. We'll talk quite a bit about that. Auto liability, we all have just to drive on the streets. Contractors, equipment, floater. It's kind of unique. Sometimes you're bringing in equipment that's very sensitive, and you want to cover the fact that something could go wrong so you don't go out of pocket. Professional liability, also known as errors and omissions, is something for consultants that deal primarily with errors that you can make in your advisory work. And what are the different types of insurance? Well, there's builder's risk, somebody who's building a facility and or modifying. Owner-controlled insurance programs, this is where the owner controls it, the OCIP, OSIP, and the contractor-controlled insurance programs that the contractor controls and make sure that the coverages are adequate. Or CSIP is another short word that they use for that. Now, standard insurance requirements. We probably should start with this commercial general liability. The limits are stipulated by the owner or the general contract, never less than $1 million per occupancy or occurrence, I should say, and $2 million aggregate. So for any one job, one mil, or one situation, 1 mil, but if there's more than one situation, then 2 mil would be the tops, and it's stipulated either by the owner or the general contractor. The naming of the owner or the general contractor as additional insured, it protects them against the fault of the participating company. That could be your company, could be someone else's. And the coverages typically included are bodily injury, property damage, products, complete operations. You want to make sure, they want to make sure that things get done. It's not just started, but the actual work is completed. Personal advertising injury and medical payments are included as part of what those standard requirements are. There are more. There's an umbrella, excess liability. Higher liability limits can often be associated with this, but this umbrella just covers a broad range of those various types of insurance requirements and standards. The underwriting is very important. They look at a number of things. We'll talk more about that, but when they underwrite it, that means they're actually making your insurance contract. They're underwriting it. They're evaluating you, determining what should be the risk and then what should be the premiums. They look at things like loss history, scope of work. Are you building a bridge? Are you, putting in a small pool in the backyard? Whatever that might be, the scope. And of course, how big your payroll is. They feel the more employees you have, the greater the risk of an issue. There are such things as exclusions. You got to make sure, because if you think you're covered and you're not, read the fine print. Exclusions are something that's very important in that regard. And that can be at any level. It could be at a residential, townhouse, condo, etc. Let's talk a little bit about one of the major elements of this, and this is the workers' compensation. First of all, workers' compensation is mandated by law. It's not a question of if you'll have it, you'll have it if you have employees that are working under your control and guidance. There are limits, statutory limits that the state requires. There's a certain amount of coverage they will have to protect those employees. And the employer's limited liabilities, they really want to make sure that the employers are set up so that they can be protected and protect as well. But there is a range of which that would be. And the negligence for workers' compensation isn't necessarily on what happened in the accident. It's just a matter of fact, did it happen on the job? If it did, then it's covered by workers' comp. Underwriting loss experience is a key there. They're going to look and see how much you've had claims in the past. Those who have more will be charged more. They're viewed as higher risk. The classification of your employees is important too. There's employees that are field laborers. Some of those are welders. Some of those are more sophisticated and more risk-oriented. There's history that these underwriters have on various types of employee positions, so they can make an analogy back to the risk your company has based on the classification of your employees. And of course, just simply how big is your payroll? Once again, the more employees, the more hours that you have, often that's related to a greater risk because they're working more in that regard. Now, the basic premise on workers' comp is for you to understand as a small business owner is safety. You got to be safe. The second point is safety. You got to be safe. And then the last point is really safety. That might sound redundant, but it's true. What you want to understand is that in the American work environment, the idea is to work hard, work productively, do it at a cost that is commensurate with the value of the service, but to be safe and for everyone to, quote, live happy ever after. If you get that concept in your mind, some of the things we're going to talk about today will become very clear and it'll be good. So it really boils down to some of the most important and impactful components is have good experiences with your employees, with your construction, with your consulting, and you have a competitive advantage. If you have a bad experiences, i.e. claims in particular, it's going to be harder to compete and you're going to have situations where your premiums can be higher. Let's talk about a little bit, and we're going to talk more about what is workers' comp insurance, who needs workers' comp insurance, how do you obtain workers' comp insurance, worker compensation rates, who's responsible at the employee level, at the employer's level, and most importantly, how do you control costs? If this is a statutory requirement, how do you make sure that you minimize your costs for something that you just simply have to have? And then also, unfortunately, in this world, there's some fraud. Periodically, we'll talk a little bit about that and give you some insights that we've seen over the years. And then, of course, there comes disputes at times. You hope you don't have those, but when they do, and if they do, you want to have some insights, and we'll try to give you some of those as well. What is workers' comp? Well, it provides benefits to employees who are injured or become ill during the course of their due employment. So bottom line is that they're working for you and they are either sick or injured. This workers' comp can cover that kind of injury. Now, we're not talking about just a cold. We're talking about an injury kind of sickness and or injury. It's intended to ensure the prompt and appropriate medical care is provided to all workers. It's the way the state and throughout the country that workers are covered, that you won't go to work every day, work hard, have something happen, and have no recourse for your medical treatment. Now, that medical treatment is something that's covered at certain levels. There's a lot of requirements. Employers as well as employees are encouraged to understand the ifs and the ands and the ups and the downs of workers' comp. But the basic concept is to make sure that you get prompt and appropriate medical care in case of an injury. And the payment is made through the workers' comp insurance without deductibles, without co-payments or premium payments by the injured worker. This is something that the employer picks up and the employee benefits from as a right of working here in the old American system. It's no fault. The injured worker does not have to prove that the injury was someone else's fault in order to receive benefits. See, that's different than other insurances. Workers' comp is simply there to protect those who get injured on the job. Litigation is limited to issues of whether or not the injury was sustained on the job or not. So if in fact there is an injury, everybody often says, well, we can sue. Well, it's really nothing to sue about. Either you were on the job working or you weren't. If there's a question there, then yes, there is. That's where litigation comes in. But it doesn't have to be your fault to get compensated. It simply has to be an injury related to the workplace. Now, who needs workers' comp? Insurance is mandatory even if you only have one part-time employee. If it's part-time, full-time, if it's one employee or 10 employees or more, workers' comp is part of that requirement. We'll talk a little bit about if you're the only person in your company, you have an option to either have workers' comp or to cover that insurance through one of your other personal insurance programs. Even companies based out of state with employees that are hired in California have to have workers' comp just to cover those workers that are hurt on the injuries in the state of California. There are fines for employees who lapse their coverage, and it can get substantial. $1,000 per employee could pop up if it's over a week. This is treated very seriously. You as a small business owner, large business owner, want to make sure you have that type of coverage. And owners may be, but do not have to be covered. Once again, there's two ways to do that for the owner. You can do it through your workers' comp, or because you are the owner, you can do it through your own medical insurance program. And feel free to ask more questions about that as we go. Obtaining workers' comp insurance, there's a lot of ways to do it. Brokers are set up to do this. Now, for those of you who have attended some of the other courses I've taught here with the business development program with Caltrans, you'll see that there's bonding, and bonding also has an element of brokers that are networked through the state that allow you to have a third party work with you on picking your bonds for your company. Insurance, workers' comp has brokers that will do the same thing, but there's also, you can go directly to an insurance carrier. A lot of small businesses don't do that because they want to shop the deal. Insurance carriers do vary. They vary in how they underwrite you and view your risk. Therefore, that can impact your premiums to be higher or lower. So rather than shop, they either go through a broker, and in some cases, you should know that the state has set up a fund where you don't have to shop. You can just apply directly to the state fund, and that can serve as your workers' comp. And then larger companies can be self-insured with state approval. There's an approval process you go by. They look at your insurances, etc. There's an application. So you can self-insure if you so choose. But that's how you obtain it, either through a broker, going directly to a carrier. There's a state fund, or you can self-insure. How is the premium calculated? A lot of you would say, well, it's too high. Well, maybe not. But we're going to talk briefly about that. We will, from the onset, say that it does vary, and it can vary significantly between carriers. Our insurance companies, they set their own rates. The base rate is the rate based on the worker classifications, which is we've talked about, very key. Are they laborers? Are they welders? Are they sheet metal workers? Are they masonaries? Each type of configuration of the worker has a different class, and there's a different risk associated with that class of worker. The size of your payroll is a factor. If you have more employees, that's viewed as more riskful. The risk characteristics of your business. So just your business alone in the industry, there's a lot of history. They use that to calculate based on the industry as well as your specific company. They do modify it based and can modify it into different degrees on the experience that you have in the industry. If your experience has been good, you have a good safety record, that's a plus, believe me. Most underwriters view that very favorably, and that can help your premiums significantly. The flip side is true as well. There's a surcharge and increases for if you do have higher rates, they will still issue the workers' comp, but in fact, that can be at a higher simply because you have proven that from your performance in the workplace, injuries have occurred, claims have been paid, and therefore they need to recover that by a higher premium. But their flip side is true too. Discounts can be available for larger firms or group plans. There are some minimum premiums based on your business. The closer you can get to that, usually is what most small businesses are shooting for. Let's talk a little bit about what you have as a responsibility as an employee. Number one, you have to post some notices. There's various forms, and the broker that you're working with or the insurance company that you're working with will provide quite a bit of information. They have to be bilingual in Spanish in some cases. And you want to make sure that that notice is posted so employees can see it readily, and it identifies some of their rights and procedures in case of an injury. You must provide and should provide a new employee guide to workers' comp within 30 days of hiring. And this will have additional information about how they are protected on the workplace and what they do in case of an injury. And we're going to talk more about it. It's very important that you go very quickly to get them to report injuries. The longer those injuries are not reported, it can make a difference. Let's talk about a couple of other employee responsibilities. One, you want to notify employees of their rights to pre-designate their personal physician or chiropractor and provide them with the pre-designation form. They can set up in advance in case of an injury. This is who they want as their physician to take care of them. It's not something your company chooses. It's not something the underwriter chooses. It's not something the carrier of the workers' comp chooses. So it's very important that you make sure that you notify them and provide them that information. There's forms again about learning about the injury, even if you suspect it may not be work related. One of the issues you want to do is to make sure that it's distinguishable between on-site or on-the-job injury and off the site, off the job. So even if it could be, you want to get that identified early and you want to address it. Sometimes employees say, well, I'm going to act like it didn't happen. I'm going to hope it goes away. In many cases, and we'll quote some statistics later, that can be a negative for yourself. You really want to get it at least on the table and then the resolution as quick as possible. The employees report if there is an injury, 5 days of injury. You definitely don't want to wait any longer than that, because not only does that begin to bring issues and concerns to the employee, which can therefore escalate the issue, but it also can muddy the water in terms of your reporting and the viewing of your company by the carrier. So be prompt, be accurate, be complete. Usually within 5 days is what they're shooting for there. Let's go through a couple of other employers' responsibility. Matter of fact, let's cover a couple of them. First of all, you want to establish, implement, and maintain an effective injury and illness prevention program. And the operative word is prevention there. What you really want to do as an employee is that you want them to feel that the rules you have, the posted signs, the signage, the markings of designated areas as riskful, hard hat, all the little things that add up encourage the employees to be safe and complete at the work site. Hazardous areas, once again, you want to make sure are designated, and you want the employees to feel open in communicating with you about either issues that they have on the job regarding safety and or reporting a claim. You want to also develop and implement and maintain a written hazard communication report. Now, this isn't oral, this is written. And you want to inform employees about hazardous substance to which they may be exposed. Now that is, why do you want to open up that box? Well, because you have to. It's a requirement. And it's actually better for you long term. Your employees will appreciate it, and there's greater chance to negate problems when it's dealt with early and effectively, and your written communication of the hazardous issues on the job site can significantly contribute there. A couple of other employers' responsibilities. You can't discriminate against those who have reported claims. If they filed claims, they're still employees. You cannot treat them like they're bad people. They're not. They simply were injured, and they have a right to the recovery and the access of the program. This is a misdemeanor by employee, so you definitely want to make sure that you're avoiding this if you can. You simply don't want to discriminate either intentionally or non-intentionally for any employees. Also, what I'll say is that there's OSHA standards. As you know, the hazardous standard agency that tracks safety on the job site has set standards. We're not going to cover those in detail, but there's numerous regulations and stipulations. You should be aware of that. And you also want to know that you've complied and notified employees in areas that impact them. So we'll make sure that that's a major issue, this OSHA. It's not within the scope to cover it in this webinar, but each of you should be aware and follow up with that level of detail. We're going to talk about controlling costs a little bit. All of you and each of you have a profit responsibility to your company. So how do we control it? Well, the first way is to prevent injuries. Have a safe workplace. Simply make sure that it's not something that happens often. That's important for a lot of reasons. Prevent the injuries. And then also have an ongoing safety meetings. You can actually meet with your staff, have your supervisors, if there are multi-levels of management within your company, have them meet with them, get their ideas, get their thoughts, get their issues, get their opportunities. They'll come up with solutions you may not have even thought of. Prompt reporting of injuries are key. When you delay reporting the injury, you've also delayed the medical treatment. That can complicate itself from a medical standpoint, but also from a psychological standpoint of the injured employee as well as others. Make sure that you're prompt. Encourage them to get the treatment they need as quickly as they can. And when you do that, that also lessens the possibility of, they call it litigation here, but I'm going to just say the severity of the claim. Not often do people sue, but they could. What will more than often happen is that people simply just want to be made whole. And the definition of what makes them whole in their mind can vary from you. But the sooner you start addressing it, and the attitude goes a long way in allowing them to feel that you care. And once they know that they're getting what they can get relative to their injury. Then they're back to work. They're back thinking, okay, yes, it was just one of those things that just happened. One of the interesting things about studies, it shows that when you have claims that are reported promptly, can cost 10 to 48% more than if they reported within 1 week. So if they're not reported promptly, I should say, it can cost you 10 to 48% more than if they were reported within a week. So the longer you wait, the bigger the claim seems to escalate in cost, which therefore can impact your premiums and how you're viewed by your underwriter. Not reporting is a big deal. Don't do it. This can definitely affect your experience modification. Early return to work program. One of the things that works well is that if you have an injury with a client, with an employee, you want to encourage them, communicate with them, because the less days they're off, it brings the injury employee back. And when you bring them back, they are on the job. So that saves you money and issues there because they probably do the job better than their replacement. Uh, Physically and mentally, it's less work on them as well as you. Um, Often, sometimes if things get tough for them coming back to do the same job, you have to modify either the work environment where they're working or the equipment or tools or uh, some step to allow them to transition back into work after their injury if they're not fully capable when they come back. There's also, you can just simply shift or reassign them to another job. The key for you is to manage this situation as versus to just letting it happen, and make sure you're getting feedback from the employee when they're coming back so that it's a two-way street. It's a win-win. You want them back, they want to be back and earn their salary. Now, not everybody's always honest. Let's talk about fraud a second. It does happen. We hope it doesn't. We minimize it where we can. Uh, the way to do that is that you are looking out, and it says protect yourself, but in reality, you're really protecting the employee too. It's a two-way street. What's good for one is actually in most cases good for the other. First of all, just show your employees that you care. I mean, your idea isn't that, oh, you got hurt, so you're a bad employee. If the workplace was safe and you've been updating them and you provided the necessary standards in OSHA and the injury occurs, that's just simply a cost of business. Those things happen. And you want to minimize them, but show that you care about them. If you're maintaining the safe environment, if you're educating them about workers' comp and the various OSHA standards, if you're designating the preferred medical providers that they want or you may know of, it's their choice solely. A lot of people try to go to local, close to the job. Others may want to go to their home physician, closer to their home. You want a procedure that establishes and identifies and reports these accidents. You want those procedures, and they should be documented. If it comes to the worst situation in fraud and you have to fire a worker, treat it very carefully and respectfully, because basically what you want to know is that you've done everything you can. In most cases, employees will recognize their shortcomings and recognize that they messed up. Therefore, there won't be the agitation that will come from the fight. In some cases, from firing, they will get agitated. They will not feel justified or made whole. And you just have to deal with that. But you can minimize that if you just handle it with respect. Very key point I want to emphasize, and I can't tell you over the 35 years I've done that. And I'll share briefly with you. We had one project our firm did, required us to hire about 100 people over a 4-month time. As a matter of fact, we did it for Caltrans, probably in the late 90s. And what was so interesting about that, when you hire that many people to do, and we were doing surveys, they don't have the same training or work ethic. And you get a lot of people who have, how can I get over? And a lot of people have their own agendas. Long story short, we saw just about every type of personality and worker within those 4-month periods. And in doing so, we got through it simply because we allowed and insisted that all of our supervisors show the keen respect for everyone, regardless of their work ethic, regardless of their production. And we were very interested in production because it directly affected our profitability. And it wasn't a matter of safety in most cases because it was a all paper telephone type of situation. But you still get these claims of stress and blah, blah, and blah, blah, and the car didn't work. So what I'm simply sharing with you is that what goes a long way is handling all of your employees with respect and letting them know upfront what is respected. And the vast majority in our experience over 35 years with various size projects and various levels of professionals working with us is that the majority of them will abide by the rules and take it to be productive employees. And those who don't can see that you're well positioned and the odds of them prevailing against you as an employer in a fraudulent effort just won't prevail. And let me tell you, that goes a long way. So I'll share that experience with you. That's something you can put in your hat and use if it feels good. All right, let's talk about auto. One more thing on fighting fraud though, first. Publicize your tough stance against fraud. Now what that means is don't intimidate your employees, but what you can do is inform them of your professional and well-scripted, well-based approach to handling any type of claim. And it's two-sided where you care for the employee, but you also will protect the firm. And that's what that means when you publicize a tough stance. You are making it clear you care about the employee and you are protecting the firm, and you will go to the necessary steps to do both, protect the employee and protect the firm. And when they see that, that scares away a lot. They're not used to dealing with the rules and regulations of the workplace in terms of compensation. Although I got to be honest, I've seen some that knew them very well. They were trying to get around them as well. Investigate it immediately. If something comes up, don't put it back. They can always make it a bigger case than it truly is. They can also talk in the workplace and affect other employees. Investigate it immediately. Let's get to the bottom line. Write up the reports. Pave the way for a smooth return. Make sure the employee knows that they're wanted back, needed back, and that there's going to be a way to transition them back to their full level. Neither deny or confirm doubtful claims. If you do not know what happened, simply says, well, we're going to file the report and proceed, but do not give your judgment, because number one, it could be wrong, and number two, in some cases, it can just further separate the employee from the employer. They can take issue with it. Don't ever, ever knowingly provide false information for whatever reason. Just always be truthful, always be complete. Protect yourself and your company as an employer by acting responsibility, and quite frankly, enlist your employees to help fight fraud. What that means is let people know that anytime somebody's fraudulent, it affects all employees, because the time the employer takes to try to remedy it, to try to fix it, any cost that may come out of it, does impact the company and ultimately impacts other employees. Okay, fighting fraud. We thought we'd cover that. Those are a couple of good slides on a number of issues. I tell you, if you took notes on that, you'll refer to those often. Let's talk about auto liability. The limits are required or no less than 1 million. Most policies are written in that regard. You should schedule the excess liability for catastrophic losses, yes, if that's something you feel necessary or is required by the company that's hiring you or the client, the builder. Seek no less than scheduled, non-owned, and hired. What you want to do is to make sure that you this whole ownership of the assets, the hired personnel, you want that to be clear, and you want that covered on the schedule. Underwriting, you want to make sure that there's a schedule of vehicles, the values, the employees, the drivers, particularly if you're hauling and so forth, and that's under your responsibility. There is a DMV pull program. Not too many of us get infected or managed by that, but you can check into that as well. These are all the underwriting types of issues and thoughts you can cover with your underwriter and or broker if that's something that you're doing. Now the contractor's equipment floater, once again, is kind of like auto liability. It's a special area. In this case, contractors have equipment and they want to make sure that nothing goes wrong here. Things do happen, and it minimizes their out-of-pocket expense. First-party protection for owned and leased equipment and tools is basically what it covers. It covers the replacement costs for that equipment. Marine form covers at any location in case it's water-related. There's some earthquake and sometimes not earthquake coverage. You just have to read the print. You have to request. Make sure you're clear. You want to carefully schedule and update all equipment to be covered. Sometimes you'll have equipment on there, but you'll go out and get other equipment during the course of a job, and you may have to add that. If you don't, it's not on the schedule. That therefore shows that it was covered. That can get to be sticky. Sometimes insurance companies will still cover it, sometimes they won't. It depends upon numerous factors. Your underwriting, this whole thing of losses, storage is always a key, and values. There's a lot of these issues that your underwriter will take a look at, and you want to make sure that you understand it as you're getting into the policy with either your broker or your underwriter. Now, one of the interesting things here now is a lot of you are not contractors, as some of the other things attest to. You're more of a professional consulting or A&E type firm. So professional liability or errors or omission is something that is needed on some contracts if you're a general consultant. It's needed for any form of construction management or consulting. It does vary. Once again, if you're a small firm, I have seen large agencies and municipalities allow this to be covered under a certain kind of policy by a prime if you're working through a prime, or in other cases allows other elements of your insurance to cover it. Sometimes errors and omissions can be expensive. So this is something you want to look into for your particular situation. You can have it for a project, or you can have it for an umbrella covering your practice. So there's a practice or a project specific, premiums are set accordingly. And the limits are dictated by the owner or the prime consultant, and in fact, usually is at least $1 million. Claims are made when coverage expires. It expires retroactively. What that means is that you have a certain period, and then something down the road comes back. That's when they go against your E&O, your errors and omission insurance. There is a number of things that happen in that area, but you talk to your underwriter. It's very complex for the professional firms. Builder's risk. Let's talk simply about that for a second. The coverage for property damage. If you're having a project built and you're the builder, you want to make sure that certain things that you don't intend to happen but happen are covered through this insurance. It happens during the course of construction. The crane can just simply swing and hit a permanent building that wasn't intended to be hit, and that can be covered through these types of insurance. It's usually dictated by the owner or the general contractor. There's a blanket approach that they usually use on this. It can be project specific. And once again, it's based on your history as an operator, what kind of claims you've had, and also both your construction value. There's hard costs and soft costs. There's labor, and then there's materials and construction. Those values that the contract will determine the underwriting costs and, of course, your performance loss history in the past. You want to read the contract because usually as a builder, there's stipulations by the owner of the project in this regard, who's responsible for getting this insurance and what the deductible is and how that's handled. There's specific coverages sometimes that are or are not required: earthquake, flood, water damage, mold, all of those type things can be in there under the builder's risk contract. You want to make sure that you're named as part of the insured because you want the actual settlement payment for you to be in that chain with the owner so that you have a say of the allocation of those funds and where they go. Sometimes during complaints or claims against builders insurance, it can get muddy, should I say, and everybody has their opinion. You want to make sure that you're named as one of the insured so that you can help your input and defend your position. That's one of the tips we'll give you here. That's very important. Don't just sign it over to the owner of the project for that payment to be made. You do want to be in that link. There's this whole builder's risk carrier responsibility of pursuing the responsibility. There could be waivers, there could be subrogation as to who is responsible first and whose insurance picks up what first. That's very important. Some of the real examples I'll share with you, we've seen if in fact you're working on a site for a client and somebody breaks in. Matter of fact, I think I had this as a question one time. Somebody breaks into the fence and begins to do damage on the property, both to your project and equipment, but also to others. The question is, who covers that? Well, there could be a whole subrogation of whose responsibility that is in your contract. So make sure you understand your contract and that you're up to speed as to what, in fact, is the order of preference. The OSIPs and CSIPs, owner and contractor coverages, you want to make sure that it's provided at the level it needs to be. The owner needs to have certain insurance. The general contractor needs to have certain insurances. And you want to make sure that they're working concert with each other. Usually the contract specifies specifically what the owner will do and suggests what the GC should do. So the general liability, the builder's risk, the workers' compensation. You want to make sure that you have evidence of the offsite general liability and workers' compensation always. And of course, you want to have coverage only applies to on-site work. You want to make sure that you're covered in the complete scope of the work that you are contracting to do for the particular owner. And you need to understand the contracts and look at them in detail to do that. The best way to get a good understanding and I think I've said this a couple of times during this webinar, you simply just got to read the contracts. But the contracts, we have a course, one of the ones that we teach is reading specs, plans, and contracts, and also the bidding process. We have another course that we offer through the business development program here at the Caltrans Supportive Services. So there's a lot of information you can get on reading these specs, reading these plans, reading these contracts that are ultimately associated with a major production, a major construction project for Caltrans or other municipalities and agencies. But reading them is the key. It's a lot of paper. The more you read them, the more you understand how they set up their systems. But you want to make sure that you don't bid without this insurance loading. You want to know what it is so you can put it into your costs. There's deductibles that you have to put money away for them in case there is a need. But you want to carefully calculate your insurance load necessary for any bid that you're going to make, and knowing where the contractor has responsibility, where the owners have it. And likewise, you as a sub or as a prime to a sub, you want to make sure where the division line between you and subs will also be, or you and primes will also be. So stay tuned, stay very up on those for both the owner insurance programs and as well as the contractors insurance programs. You will have coverage limits, terms, compare them to your standard coverage. You may have sufficient coverage, you may not. You may have to increase it, but look at the limits, know where you are. Compliance is very important. Your insurance rating information to validate your insurance credit. You want to make sure that you're in compliance with what your underwriter requires and that that's sufficient on behalf of the owner of the project. The owner may provide coverages and that can minimize what you have to get. Sometimes owners find for the total cost of the job, rather than ask the primes and subs to put it into their contract, they get an umbrella policy. Other municipalities, I know some that we've worked for, they want no insurance responsibility. They just give it totally to you as the contractors, both prime and subs. And workers' comp is provided monthly payroll information. You want to make sure you're always on top of that. That liability, that obligation doesn't go away. Workers' comp is very key in that regard. Let's do a couple of last slides on wrapping up here. Workers' compensation losses will be included in your statistical data and experience modification rating, meaning that if you have a claim, they're going to know it. And every time you go for another premium, they're going to review the basis, and any claim that was in there will be viewed and evaluated as to how that affects your premium. You can familiar yourself with OSIP and CSIP manuals. There's claims reporting procedures. There's occupational clinics. There's all types of information to help you know what the owner controlled insurance programs and the contractor controlled insurance programs are and required. And your broker can help you in that regard. And certainly your underwriter can help you. You may have to participate in a mandatory project safety program if they feel like you need the training, you would benefit from the training. So consider that as well. But stay with your compliance requirements. And as you go through your retention of payments and the progress of a particular relationship you have with your underwriter, stay on top of it. Make sure you're doing what it takes, how it takes, when it takes. Okay? So with that, that's pretty much our wrap up on all of the issues and thoughts from an overview of insurance related to projects that you may see or do.